Okay, let's review Friday, May 16th. Before we start, I want to look at the daily chart. And an important point I want to bring up is that we've been in a bull trend lately. So you can see the last few days of this week have been bullish days. We're above the moving average, we're getting bull bars. Days are closing higher than previous closes. So when we look at this, what do you notice that's on the bottom of these bull bars? Well, we have tails on the bottom of the bars. And if we look back at those days, we would see that the tails are happening at the start of the day. It's just kind of like during this sell-off, when you see a tail on the top of a bar, on the top of one of these bear bars, most likely that tail came early in the day. So if we're looking at this sell-off, that tail did not, the market did not go sideways during the day and then go up in the last few minutes and create a tail and then raise down. That's not what happened. Almost all the time when you see a bear trend, if there's a tail on top of the bar, that started in the first few minutes of the day. It started on the open, that tail. So same thing with the bull trend here. If we see the market going up and there's a tail on the bottom, that tail probably started early in the day. And this is what we've got on Friday. So this is a great example of this idea I'm trying to get across to you. We've been in a bull trend. These tails are occurring early in the day. So if we're in a bull trend, the day is more likely to end up as a bull day, a bull trend day. So we want to try to be finding the low of the day early. And that brings me back to our 5-minute chart. All right, so the day started here, and what did we get? We got an early low of the day. We got this bar closed at 10:45, and that ended up being the low of the day, and we ended up as a bull trend for the rest of the day. So anytime you can find context on a higher time frame, and then you can find ways to trade from that, and that's going to give you an advantage. So based off of that idea, there's a couple of trades I want to mark on the beginning here. First is this buy. All right, so if we know the daily chart has been in a bull trend, and we want to try to find an early low of the day, I think this is a reasonable spot to try to go long. We have a double bottom, an early double bottom. We're at the moving average. We've had a couple attempts by the bears go down, one, pull back, two. And it's also happening around the close of yesterday. So it's basically testing the close of yesterday, it's testing the moving average. There's a general area of support here that it's testing. So I think it's reasonable to buy above here. Now, is this a scalp or a swing buy? Well, our odds are not all that high because we're getting lots of reversals on the open like this. We're also following this bear bar. So the odds are not all that high. However, if we're right, then and this day ends up being a bull trend day, then we could probably have a lot of profit. So here's just 2 times your risk, for example. And if it is going to end up being a bull trend day, you probably be able to get a lot more than that. What some people will do is they would buy here, and either they would get stopped out or they would just hold until the close of the day. It doesn't matter what happens. Maybe if the market really takes off and really goes far, they'll take some profits up there. But one easy strategy to do is just to buy here, and the day is more likely to be a bull close, right? So they can buy, and whatever happens through the day, then they'll just exit at the end of the day, and their odds are greater that it's going to be a bull close. So in theory, that's a profitable strategy. Okay, so they buy here. In this case, they get stopped out. And that's okay. That's common. If you're trading on the open, you're going to get stopped out often, and you're going to have to take several trades to be able to find the right direction. So what would the second trade be? I like buying here. All right, we had this strong bear move down. 5 bear bars, pretty large bear bars. We would expect a second leg down. However, the bears couldn't get that. They couldn't even get back down to test this close. Instead, what we're getting now is a pretty sharp reversal back. Now we're above the moving average. Let me zoom in a little bit. From back above the moving average, bears try to go lower. They try to break below the moving average and they can't. They try to go lower again and can't. And once again, they try to go lower and they can't. And get this good looking bull bar. Now, a lot of the times I'll wait for a second bar, like a follow through bar to buy above. And I'll show an example of that later. However, this is still okay to buy above, even though it came after a bear bar, because we're trying to swing trade. This is a place where the odds, even though I think we're probably getting some sort of trap here, which increases our odds, we're still kind of on the open. We're still in the middle of this range. So the odds are so lower, and our potential for the reward is so great because the daily chart is in a bull trend. So this might be an early low of the day. So we want to be trying to swing trade. So we buy above. Different options where to put the stop. We can just keep it simple and put it right below. And there's 2 times your risk. And looking at the day we got, you could have gone for a lot more than 2 times your risk. Probably could have gotten 5 times or more of your risk. So yes, you took a loss here, but then here's your winning trade after that. And if you're going to trade like this, then this is probably a pretty normal normal series of events. You're going to lose once or twice, and then you're going to have the winner that offsets your losses and gives you some gains. Another reason to buy here is it's probably a head and shoulders bottom. All right, so we have the left shoulder here, and here is the head. And now, if you buy above this bull bar, you're betting that this is the right shoulder. And it's about the area where the right shoulder would be. So I think there's several reasons why it's reasonable to do a swing trade here for a buy. So I like buying there. The second buy is above this bull bar here. It's a bit of a bull doji. There's a decent sized tail on top. I think this is one of those cases where if the market goes above here, there's probably enough bears that are trapped that they're going to rush out of their shorts and it'll push the market up. And so I think that offsets there being this big tail on top. In fact, I think in this case, that tail on top acts as a deterrent. I think the market wants to go up here, but there can't be too many people placing their buy orders, or else they won't be able to make money. So I think this is a case where they sell into the close of the bar to try to shake out some of the longs, so that that the smart institutions can be the only ones that are actually buying here. So I did make a video on this one time on it was a lesson on weak signal bars, and so this would be that case. If you have a weak signal bar but you think it's still a good buy, then you can swing trade, and I do think that'd be the thing to do here. Once again, we're keeping in mind the context that we're in a bull trend and we're possibly getting a breakout here. And think about the bears that shorted during this. They couldn't get out here or here. At some point, I mean, they're going to give up. They're saying they see the context as well of a bull trend, and they say, we're just on the wrong side. The bears are not making any money. We have no chance. We need to get out if it goes up here. This might be the breakout point, right? We've seen the support and resistance level across here, and now that we're starting to push right up against that, we might be breaking out, and that might be the end of any hopes we have of making money on the downside. So I like that as a buy. The market does end up breaking above that, and look at the pullback that you get. Pullback does not come back and touch the high of this breakout point. And when I see that, I draw in a measured move. So here is where I would draw in that measured move. It's very clear. I think a lot of people are going to see it. I don't think there's going to be any confusion on where the correct measured move is. So I think this is a correct spot for it, unless we get an even better one later. But I think this is very, very clear. It's clearly at the top of the range that we've had so far, and the market tried a couple times to come back down to it and couldn't quite get there, and there's this open gap. All right, so we can see there's this open space right there. So there's a gap, and that encouraged me to continue to look for buys. Now, what if you want to buy somewhere in here, but you don't get the setup? You see this gap, and you say, yes, we might be coming up here, but I can't quite find an entry in here. Well, you can go to a lower time frame and try to find it on a lower time frame. So if you think you're pretty sure that this is forming that gap, then go down to like a 1 minute chart or 2000 tick chart and look for a buy setup there. So, maybe you would risk like 5 points, and then you'd be trying to go for 15 points or 20 points and trying to get out up here. So that'd be a way to swing trade if you can't find an entry on the 5 minute chart. So keeping in mind that we have this target above, and notice I have the overnight highs drawn in here of the green line. So now we're above that. Now we pulled back once. Now we double bottomed at it. I like buying above this signal bar here. So this is a follow through bar after this bull bar. So now we've had a double bottom at the moving average, at the overnight high. We're in a bull trend. Now we've gotten a bull bar and a follow through bar. So I like buying that as well. And what I did with this was I went ahead and just scalped because we were getting later in the day. And if you're scalping for 5 points, well, this bar was small enough that 5 points basically was a swing. So you'd be buying here, and you'd be risking here. So you'd be risking about 3 points in a tick. So if you're going for 5 points, you're getting out here, you still have plenty of room before you actually get to this measure and move target. And 5 points is, 1.5 times 3 points. So effectively, this is still a swing trade, even if you're just going for 5 points. So that's a good buy there as well. So yes, the day started as a trading range day. However, it broke out and formed this gap right here. So at that point, that increases the odds that you might get a bull trend out of it. It could still be a trading range day. Like we might come up here and then pull back down here and then have an upper trading range. That's common, so that could be possible. But once you get this really clear gap and really clear that bears are trapped from down here, then I think that increases the odds that you'll be able to buy and be able to take buys like here or somewhere during here. So what is next week looking like? Well, this week was a pretty bullish week. I mean, we gapped open way up. We gapped up 200 points, and then we followed it with 4 bull bars and 1 weak bear doji bar. So it was a pretty decent bull week. I would expect us to have some kind of follow through off this. So I would expect, maybe not. It's tough to say because it's, with today being Friday, how's it going to look over the weekend and then going into next week? I would expect some follow through buying. Doesn't have to be next week. Next week could continue up, or maybe next week pulls back some. But I would expect then, like the week after, for example, to be another leg up, maybe another couple 100 points up. So I don't think this is the end of the buying. However, it might not happen next week. It could happen next week, but if next week pulls back, I would see that as more of a buying opportunity. One concern I have is that we're getting pretty far from the moving average now. So that might attract some profit taking, being so far from the moving average. And I've had this measure move from this big bull bar for, since it formed, I've had this measure move. I've been talking about this. And we're basically right at it. All right, so we're far from the moving average. We're at this measure move target. I would expect that to increase the chances of some profit taking. I mean, if I know, like if I was holding a long position from somewhere down here and I was getting up to here, I would either take full profits or partial profits. So I would imagine that's what a lot of other people do as well. So I would expect some profit taking that might lead to a pullback, but then I would still expect more up, or at least a retest of this high. So I mean, either a continued bull trend or a trading range in which this would be tested again if it goes down. But another point that adds to the bullishness of this is we closed on the high. Right, the week gapped up, then it opened here, and then we pretty consistently trended up and then closed basically on the high of the week. So this is the E-mini weekly chart now, and you can see, so this is what that week looked like. It was a really strong bull bar. It really looks like the bears that were selling down here are trapped now, and they're exiting and they're rushing out of their shorts. So that's bullish. So that's, I mean, so even though we're far from the moving average on the daily chart, I think the market is just really bullish, and this is going to be, one of those situations. It doesn't matter that it's far from the moving average. The market's going up, people are buying, and that's the way people are making money right now. So I would not think about shorting. Like I said, I think it's okay to take profits at this level, but I would not be taking a short position here. So I hope this video was insightful, and if you guys have any questions, just let me know, and I'll see you next time.